Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. As expected, the sequential higher lows that we saw in corn appear to show that corn wants to, in fact, move higher. We recently tested recent highs, and with today's move, we actually have broken those highs, and corn looks to perhaps move up to about 390 just ahead while we wait for the next upcoming WASDE report to come through. Today's move shows us that the market does appear to have some legs, and the big move that we saw yesterday was right in time with regard to our time factor. The recent move that we've seen is also consistent with the 5-leg sequence, where we have the first wave coming in here for wave 1, wave 2, wave 3, wave 4, and now we're waiting for terminal wave 5 that could terminate either somewhere near where prices are right now or could in fact move up to about 390 and possibly as high as 400. Near term, we're looking for prices to advance close to that 390 mark we spoke about just a moment ago. Prices right now right up against volatility-based resistance, but additionally we have a target band somewhere in the neighborhood of 390 to 394. And that's where we anticipate that price could in fact go up to. As you can see right here, our volatility band is also coming in near that 390 mark, where it comes in for a little bit of confluence for the near-term volatility band itself. Once those two meet, this is going to be a very important area of potential congestion, which is where this market could potentially look to find a nice pause. Soybean met very good resistance overhead, and today's move was quite a bit of a surprise and quite a large move. We're looking for the market to actually give us a bit of resistance up against our 1x1 angle, which is essentially exactly where it closed today. If this market's able to have some follow through tomorrow after the WASDE report, we would then look for the market to perhaps actually test previous highs, at which point a marginal break up overhead is probably where this market could very well go. For now, we would look at 1085 and 1095 or even about 1100 as the next two key areas of potential resistance given the strength of today's move and the advance that we're seeing. Additionally, as you can see, this market has been staying pretty close to remaining inside of a nice tight channel that the market's been moving inside of here. If it's able to break up above this 1x1 angle and find a new channel, this is the new area in which you would trade. Breaking above this channel then would allow it to find potential support overhead, but our disposition right now is that the market could very well come up, find a bit of resistance overhead near that 1090 to 1100 mark, and upon failing there, we could see a very nice short opportunity come to fruition. The high of the day today was very close to our 90-degree mark of 1080, which is exactly where the market sits right now, and coincidentally, it's also right up against volatility-based resistance overhead. If the market's able to break above this area, as mentioned before, that 1090 to 1100 mark is perhaps where the market looks to go. And our next level above that and sits at 1113, and this is where the market should find very good congestion overhead. We can see our volatility bands are actually making their way down, and as the market comes in, this is where we're looking to find a potential band of resistance as well. And so we have a couple items coming in for confluence for overhead resistance, and given the bearish narrative that we've seen for soybean, we anticipate that overhead resistance should hold pretty well for the market to make a nice move to the downside. July wheat has been holding serve and key support at 440, as well as good resistance at about 460. As the market actually trades along this area here, part of what we're looking for is after having had a very nice low come in, the market made a nice advance for our first leg up. We now have a bit of a consolidation or corrective move, which often can last about 3 legs. So here we have the first leg down, next leg up, and leg down. If this area is in fact able to hold, look for the market to break up and perhaps test overhead our 1x1 angle. This market's been holding inside of volatility-based resistance pretty well, and this resistance zone can now in fact become support for it. We can see how the market actually is holding very well across our sinusoidal wave. And so if the market continues to hold very well above 450 or so, we look for the market to break to the upside and perhaps reach a target somewhere in the neighborhood of 470 to 475, where our next band of volatility-based resistance should materialize. For now, the two regions that we've seen at 440 and 460 continue to be very important for this contract. Upon breaking either side, we should see some follow-through. Our anticipation continues to be that we should see some follow-through beyond the 460 area. Crude oil continues to hold serve inside of support and resistance, the same band that we've been talking about all along, with resistance at 56.24 and support below at 51.75 had been holding very well. Yesterday, we saw a minor break and thought that after the market had been trading in the bottom half of the trading range, that we're looking for the market to actually break to the downside. Yesterday's move appeared to be one that was going to, in fact, break down. But after today, we can see the market broke back up into that trading range once again. And so it continues to hold inside of that key zone and needs to break through this zone very clearly to have some follow through. Right now, it may, in fact, end up tracing one of these trend lines to the downside if it's able to capture or fall upon one of these. If the move down actually moves down a little bit more slowly, it could very well be this line that he traces. And once it's able to either get above the halfway mark, then we can potentially see movement to the upside. As long as he stays in the bottom half of this trading range, we anticipate continued weakness, and it's only a matter of time before he breaks down. After breaking down, in the event that that happens, the two areas of potential support that we see currently live at 50.36 and then at 49. Once the market breaks down, these are going to be the two areas that we look to find good support. And upon reversing off of either one of these levels, that is a potential buy opportunity. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next.